My surname is Chisti.
I can't say your name. You say Chisti.
Chisti, exactly. Like Christy.
You say Susanne.
Susanne Chisti.
Susanna.
Susanne.
And to Susanne, did I say it right? I can't say your name.
So, let's take some questions. I like questions. What do you guys got?
The London trip is continuing. I'm here with Susanne and with Nicole. These are the founders of the Fintech Circle, and I have no idea what that is, and I'm about to find out. So you're going to see it live as usual. They got a couple of exciting announcements from what I understood coming out as well. So tell me about what you do, because I'm from a wealth manager, and we haven't interacted before, so I'd like to get to know both of you. Do you want to introduce yourself?
Sure. Yeah, I mean, my name is Susanne Chisti. I'm the CEO of Fintech Circle. I left banking 2 years ago to set up Fintech Circle as an angel network, and we invest in fintech startups. And our goal is to find the best startups and to match them with the best angel investors. So that's one thing we do. The second thing we do is we have got a consulting practice, an advisory practice, which Nicole is running. So hello to you, Nicole.
Yeah, and I'm first of all completely allergic to the word consulting and advisory, which puts us in a bit of a difficult spot. But essentially what we act is as brokers between the big guys and the new entrants, right?
New entrants like small companies, startups, and finance.
Growth companies, smart companies as well.
Wait, are you from banking as well?
No. So I'm a technology person through and through, and I've fallen into fintech. Very thankfully, enjoying it. So we really have almost turned the idea of guiding companies on its head. So our practice is literally the word practice, which is we are fully execution based. All of our work we do with corporates are actually working with the innovation first, so we actually build our own community of innovators first, and then retrofit capability and insights into industry pain points.
But
so
why? How did you get started on this? Because everyone knows that finance technology is big these days, and it's been for a while, but how did you get together actually?
Yep.
And then how did you decide to start this venture?
I mean, for me, it's a long story because I was studying 20 years ago in the Silicon Valley, and I was studying in Berkeley, and I basically lived there, when the internet was being invented. It was the time Yahoo was being founded, in the valley. And
when did you have your first email account?
My first email account was probably 95, right before.
Early adopter.
Exactly, yes, early adopter. And the atmosphere in the valley at that time was incredible. There were so many great entrepreneurs, tech inventors, setting up new businesses. And when I felt the same feeling again 2 years ago in London with fintech, I thought it will be big. This whole fintech explosion, happens in front of our eyes. It will be enormous. And now, 20 years later, I thought I wanted to be part of it. 20 years earlier, I was just too young, too immature to realize how important the internet would be for us. But now, with fintech, I thought now is my time. I want to be part of, and I want to connect all the people I knew on one side, which were entrepreneurs looking for money, and on the other side, were lots of investors looking for the best deals. And that's why we decided to set up Fintech Circle.
But can I speak for that? I mean, a lot of people think that fintech or startup-y thing has to be under 23 and doesn't bring, it's a tech guy who sits in a room and codes up something, and all of a sudden he's a billionaire.
Yes.
And yet none of us is under 25. So who's actually driving this industry forward?
Well, I think it's a great question, and I think what we've got to now, thank goodness, actually, is I call it the Fintech 2.0 phase, which is the fuzziness has come off the market. We've naturally consolidated, actually at quite a pace. Thank goodness, right? So anyone who's going to make it, in terms of who's been around for the tenure of the 4 years, that has kind of caught the wave, has kind of navigated their way through. And I think the key thing here is it's actually an industry that's almost 70% based on the intersection of what exists as financial services and has existed, infused with this innovation. So we've gone past the terrible kind of D phase, all right? really where the magic is happening is in that special middle ground.
What does D-phase mean?
Disruption.
Disrupt, okay.
Yeah. Sorry, I didn't want to say it,
You're right,
but we
okay.
had to say it. Yeah. So this is really why it's actually the maturity has come into the market. A lot of ex-bankers have become very successful founders, and actually because 80% of the opportunity is in the enterprise space, and we're big believers of that, or at least B2B2C, you have to have the capability.
We
You
talked a
have to
little
have
bit
the
off
talent.
camera before about Bill Harris, right?
Yeah.
Like to me, he's doing it right.
Absolutely.
And he's also not under 25 and coding his own business. He's from a business and he knows how the business works. So is that where you see more of the progress?
Yes, totally. I think you need to have domain expertise, very strong domain expertise as a founder in fintech. You need to be able to understand the business models in banking or in the insurance sector. You need to understand how you serve customers and how do you build relationships. So that's what you learn with time. That's why we see the average age of fintech founders are much older than any other tech founders normally.
And
But I
I
still
think
don't
also
really-
the other kind of key thing is in the Fintech 2.0 phase, Fintech is actually becoming meaningless. It's actually heavily verticalizing, right? So these sub-segments around wealth or insurance or, payments and lending long gone. But so this verticalization is a very natural phase. And
Could you say that again? That payments and lending are long gone? Because I can't convince anybody of that, but I believe it personally. There's in the tube here in London, there's Android Pay and Apple Pay plastered everywhere, right? There's the banks they've exited.
We always look at look at the world with investor eyes. Investability is our criteria, so we look at the opportunity as an investor would, and there's very little headroom in these two spaces. But in the B2B area, and however you define that, there's huge headroom, huge infrastructurally. There's masses of opportunity. And so I think this verticalization talks to deep domain expertise, and that can only come from wearing your shoe leather out and having been in the industry, or understanding and being able to relate back into the industry.
Done the hard work before. But you strike me, to be honest, you strike me both as extremely serious, focused business people.
We are.
Right? So how does the business actually run? And when you're looking to, you said you marry up investors to fintechs. How does it actually work?
Yeah.
What do you do for them that leads to them investing in the right businesses?
That's a good question, but I think in terms of our philosophy, maybe I should say that as well, our vision of our values, one of our values is that although we come, from the banking sector and from the IT sector, we very much think collaboratively, and we think it's incredibly important to respect startups, to respect entrepreneurs, because we've seen it often where it doesn't happen. We've seen arrogant bankers looking down at startups. We've seen arrogant investors looking down, at the people who are asking them for money. So we have got a very much equal level playing field where we want to work, with the best entrepreneurs, and we've got a no jerks policy. And what this means is basically if somebody is a jerk, and somebody is behaving badly, we just don't want them in our ecosystem, because I think it just doesn't work, because it doesn't lead to long-term, good relationships. And so the way we choose entrepreneurs is they go through a selection process, which we have developed carefully to choose the best teams. So we really look at the founders, how long they've worked together, the capabilities they bring in.
Oh, wait, I'm confused. You're not an accelerator.
No.
You're a network,
angel network.
a circle, an ecosystem,
Yeah.
bringing together the right people.
Exactly.
But you're still doing criteria selection and filtering so that you get the right people in the circle.
Yes.
Okay. And how often does that happen? Is that an annual process that you run through? Every process has a start and stop, or is it just...
Yes.
It's constant.
It's a constant process. We've got angel networks 4 times a year, where we've got about 80, 90 investors coming together. Where 8 companies pitch for investments to them. So that's our selection process where we source the best fintech talents. In terms of our advisory practice, here our focus are large banks, large institutions, and we help them in their innovation strategy. So we've got 2 lenses. One lens working with the fintech startups, and the second lens is working with established companies. So that's when we're trying to, as part of our ecosystem, connect them as well.
Where's your focus? Is it in, you said wealth, reg, insurance?
Sure.
But you
Yeah.
do
So-
each in a different How do you do it?
So our enterprise business model, essentially, this ecosystem-driven advisory model, has itself verticalized. So we can only do due diligence by actually going deeper into industry. And so about 6 months ago, we pivoted and actually took a kind of a generic practice into really 3 major surefire bets. One is wealth, wealth and asset management, to be fair, followed by insurance, and then regulation compliance could be vertical or horizontal, depending on how you look at it. And we've spoken about the FCA here today, right? I mean, it's just a fertile ground. So very, very simply, we've taken our actual look at where business interests are going to lie, and we've picked our bets. We've placed our bets.
Can I
there.
give you a little feedback?
Yes.
And it's meant as not advice, but just more like my observation on the world. Is wealth is painful because it's such a long-term business, and the decline is happening so fast. It's like, is the ocean actually heating up? I can't feel it. And I think the reg tech is probably, regulation technology is probably closer to monetizable in a way, because you can specifically say we can prevent 1,000 frauds and measure that so tangibly, whereas in the wealth business it's all about long-term behavioral finance.
Yes.
And I struggle as an innovation manager in that space to launch models because it's so long-term.
But what I like on the wealth tech side is companies who help to generate better performance, for example. Because I worked for Morgan Stanley in asset management for 7 years, and our fund managers, what kept them up at night was that they had to outperform the index to keep their jobs, because otherwise you were replaced, with an ETF quite soon. Yes, and so nowadays, then there are fintech companies out there which help you to generate alpha and help you to outperform, beat your index, and that's hugely valuable. So,
Can you please define alpha, because a lot of people
of
don't
course,
know what that is.
what we mean by that is, in order to outperform the index, that's how you measure it as a portfolio manager. You've given a benchmark, basically, and the benchmark is the index. It's the sum of all stocks in the market, and your goal as a good portfolio manager is to make your return higher than the index. So you want to outperform the index, and this differentiable value is the alpha you generate.
That took me back to finance 101. That's awesome. That's awesome. Yeah, actually, you know what? I challenge anyone who watches this. We need 2 T-shirts, Fin and Tech, because that's what they are. Is FinTech and 2 people. It's awesome. We can actually make a visual out of that later. But it's really impressive. You're both experts on that, so it's been a successful business.
Yes,
for
very
you.
much so.
For
Yes,
2 years.
It is. It hasn't been either. I think very much we are living through our own organic growth. Also, we're a startup, but we're a startup of different phases. We have made many mistakes or gone down different paths and had to pivot ourselves. We've run fintech companies. Okay, every single member of our team is either straddled and been a co-founder. So we have a DNA that is, yes, we may have corporate pedigree, but we flipped, and I think that is what's given us the edge. We are not theorists, and you're in a potential anchor zone of understanding what is innovation. Innovation could be many things, all right? When you ask, it's a different thing, but the one thing about innovation is it's all about the practice and less around the theory, right?
Boom! That's exactly right. This is the maker zone. That's why nobody. If I had a sister, you'd be it. Nobody gets that. Stop the BS and make something and try it. That's exactly right.
And stop the PowerPoint slide decks. You know what I mean? Just
God.
get something done. Yes.
We actually deleted PowerPoint off our computers, but don't tell anybody. We still have keynote.
I think the one thing that I think the most overriding kind of personal characteristic of this industry, but any real sustainable innovation journey, is hustle factor. And this is a hustle game because it tests you in every respect. If you're going to play in this space and you're going to play seriously in this space, you've got to play with big boys and big girls. You've got to be in it for the long run. You've got to sustain huge hurdles, such as compliance and regulation. And the prize is big, but the journey is a marathon, not a sprint.
Did you hear the Gary V in this? Hustle.
Yeah.
Hustle. We are big fans of that.
Hustle.
We ascribe to that.
Yes.
Can you speak a little bit more in detail about the patience factor? Because what I see is that folks think, innovation, this is sexy, this is AI, this is deep learning this year. Give me a pilot, Dave, which looks cool. You've got 3 or 6 months to survive. What I actually see in launching businesses and executing them is it takes 2 to 4 years.
Yes, that's
Do you
right.
see the same?
Yes, definitely.
Definitely. I actually say to clients, I say, think of this innovation ecosystem as external R&D. Think of it that way. Think of it in component ways. And if you can adjust your attitude to actually seeing the evolution of that as into forming businesses, you will have a much more tempered attitude and level of patience in terms of return. Do not see this ecosystem as formed and shaped. It's actually the value is in the fluidity and the connectiveness of what you're getting as a funnel, rather than necessarily every single bet is going to be a unicorn. Right? But there is amazing essence and talent and learning, even in the broadest funnel, even in the most emerging business. All right? You've just got to understand with the portfolio management strategy how to tap into that.
Could you explain unicorn? Because some people watching won't know what a unicorn
Okay,
is.
so unicorn is a business that is generally in tenure, probably less than 5 years old, that has reached a threshold in valuation of $1 billion.
So it's worth $1 billion to buy.
Exactly, exactly. And it's generally, it's a tech digital
I
business.
think we've had a couple of fintech unicorns, right? TransferWise, PayPal, if you count it.
Zemo, yeah.
Zemo, the insurance business in the US.
Yeah,
Lending Club.
Lending Club,
Lending Club
sure.
out there.
Exactly.
Did better ones? Really?
Yeah.
Yes.
Implied valuation over $1 billion?
Yes, it's kind of.
It's a robot.
Yeah.
Okay.
Yeah.
Yeah.
But I would say, I would say that in terms of valuations, I think it's hard often because you often get companies which are overvalued, valuation fluctuates. So I think often when people start the business, they have to be patient, like you said, because you can't just want to become a unicorn. You just need to first build the foundations of your business well, and then learn how to get this product market fit, and then learn to scale. So it must be step by step,
Yeah.
and in order to achieve your goal at the end of the day.
I wanted to ask you this. When is the best match point or the best part of the cycle for a startup to join, then have a proper investor? Do you do Series A, so basically a couple of million in that early phase, or you're not angel, or is it really angel?
It's really
It's
angel.
first small
Yes.
seed investment.
It's seed.
Yes.
And actually, the fintech is a nascent industry, and for whatever you hear, actually, the seed stage is actually probably the most active. I mean, most VCs are actually investing in seed rounds. Most VCs in this space are actively investing in seed rounds. Corporate venture is active in seed, yeah. So it's a busy space. Because it's a nascent industry.
What's the right point? What kind of traction do they need to have? They aren't $1 million a month business at that point.
no.
They're very small. They may have 10 or 20 customers.
Normally, the companies we look at are those ones who have done the family and friends rounds, meaning maybe raised £50,000, with the first group of their family, their friends, and now they're raising for the first time outside money. It might be 100,000, might be $500,000, up to normally in this range.
And they give away equity.
And
for
they
that.
give away equity for that, exactly. That's kind of early stage angel investing territory normally.
Okay, for those of you who are confused about angel investing, please Google it. This is a little bit technical now, but it's for the people who watch it who understand it, this is spot on advice.
Yes.
So you think that's still the sweet spot is angel seeds, 100 to 500K just after the family money ran out. And
Yes.
they've got decent traction, but they're pretty small.
Exactly. And then normally they go into the next stage, which would be later seed, which would be early VC stage. It's almost like you have got a finance ladder you walk through. So when you start your own company, it's like a marathon. You're doing a marathon. It's a long-term process. You go through 4, 5, 6 financing rounds. It's not a sprint. It's not just you're never done with one round, but it's an idea on the first level on the ladder.
Any particular ones that I should be looking at, or we can do this after from a wealth perspective, that you want to introduce us to?
Oh, we've got plenty. We look at about 200. We have a fluid deal flow of about 200 companies at any point in time that we are undertaking due diligence for. and that moves, as you well can imagine. So yeah, maybe for a price we could discuss it.
Okay, you know what, you do partnering model. I get it.
But I give you one example. I can give you, one example, and I won't say the name. I just say the type of business. We talked about alpha before, outperforming the index and how important it is. And there's a company, a fintech company, who is able to predict the down days in the market 48 hours before it happens. So if you are a portfolio manager, you can hedge your positions, which means you can protect your portfolio against the downturn, which is like almost like an insurance policy that your performance doesn't go down. And that's hugely valuable. So nowadays, those companies are out there.
Social media sentiment or something else?
It's not social media sentiment. It's used on really flows, equity flows in the market, and how it's artificial intelligence analyzing those flows and what you can predict.
Okay.
That's really interesting.
Yeah, I'd be interested in taking a look at that.
Yes.
I mean, we did the social media prediction stuff. Prediction markets is interesting. I haven't figured out how to apply it yet because it's so twitchy.
Yes.
And it's also not really proven yet.
Sure.
If you look at AugerNet or whatever, if you look at Ripjar in terms of social media or data miner, it's one input, but it's more investment banker.
Exactly.
Yes.
That's it. It's one input. I mean, the whole notion of unstructured data has to be something any portfolio manager considers, but it's a component, right? And crowds are. There's an amazing term that I learned actually from one of an affiliate company called social contagion and the trust factor. And crowds have both, and they're not actually necessarily aligned to good investment decisions, right? So this is the danger with social media. So
Okay. I was with Debbie Mohan the other morning. You know what she said? She was watching the Trump election, and she knew he was going to win because she was looking at what all her friends were saying on social media, and she figured it out sort of 3 days before the election, and she knew with certainty, and it's what we don't know that scares us.
Yes.
exactly.
That was a pretty good
That's true. That's very true. There's one chapter in the Fintech book about angel investing as well. So if somebody wants to read up on the topic, they can do that.
Can you tell me about this book thing? What I understood is you might have something in the pipeline there.
Yes.
What's happening?
First in the book, it's a Fintech book. It's the first globally crowdsourced book on the fintech industry, which basically meant that we went out to our global community of entrepreneurs, of investors, of entrepreneurs, and heads of innovation in banks, and we said to them, who has got the most cutting edge thinking, the most best products we are working on, and everybody could submit an article to us. And then we chose the best ones, and we asked our public, our community of 18,000 members to vote as well. And the Fintech book was launched in April this year, and now we have sold it about 10,000 times globally already, so it became a global bestseller. And it includes, more than 27 countries represented, entrepreneurs, from all over the world are represented. So we're really proud of this community which came together.
I'm ashamed I'm not in this book.
Yes, but
I'm super ashamed.
You've got a chance.
You've got a chance now. So the chance is that we are launching 3 new books. And this is now...
It's like the Hobbit series.
It is.
Different colors.
We need
like
that
Star
hat.
Wars. Bring the hat. There you go. We'll put it on there. That's cool. 3 new books.
3 new books, yes. And the 3 new books are on key topics in fintech, which we see as very relevant now. And it will be... The 3 books will be, the first one is on wealth tech, it will be called the Wealth Tech book. The second will be on insurance, will be the Insure Tech book. And the third one is on regulatory technology, it's the Reg Tech book. And those 3 books will be open for applications from entrepreneurs, globally, investors, bankers, innovation fleets, will be open from end of November 2016, so from now onwards until end of January 2017. So people can submit an abstract, a proposal for what they want to write in the book, and then in February next year we will do a voting process, a public voting where everybody can vote which articles they want to have fully written.
Good. Is
And
it
then-
possible? I'm going to submit video.
Yes, you can submit the
All right.
video.
You
as
can
well.
auto-transcribe it with Zencastr or whatever.
Yes.
So to transcribe the language anyway, so you'll have it in natural language.
Perfect.
But
Yes.
yeah.
Yes.
I'll submit a video book, a blog.
We can talk about a podcast series because I believe that's a bit new for you guys, right?
We should.
Yes.
I'm going on Dave Breer's podcast later
So where's the
today.
book available?
And the book will be edited by our team of editors during next year. They will be edited by Wiley. Wiley is our global publisher. They will be publishing the book again, and so we expect it to come out end of next year, maybe early 2018, depending on how long the publishing editing process takes. Because globally crowdsourcing the book, having 50, let's say, authors who all don't know each other and all write articles independently from each other means you need to go through a proper editing process to ensure that it all flows well. It tells a story. So
So they can keep in contact with you or keep following your social media so they can keep updated with what's happening.
Definitely.
Where were
Very
the
much so.
18,000
Yes,
members from?
exactly.
Is that LinkedIn or is
LinkedIn.
LinkedIn.
So that's your primary channel.
And on Twitter, it's 33,000 members on Twitter, so across our Fintech Circle group, yes.
That's great.
Yes, similar like you, Dave. Huh?
Okay.
Yes,
Yeah, no, I'm
so
trying.
Good to be finally meeting.
But I think that's really good. The reason people should do this is because it's only by giving that you get.
Yeah,
And
exactly.
everybody contributing in makes this whole thing faster.
Yes.
It was no Edison without Tesla. Did I get that wrong? Who worked at
Perfect.
Tesla? Was it?
Before the end,
Yes.
I want to jump in. So the LinkedIn and Twitter, can you guys just repeat that?
Yeah,
So people
for
will
sure.
know?
Numbers?
Also
Yes.
for the podcast listeners.
Sure.
So on LinkedIn, you're invited to join our LinkedIn group, which is called Fintech Circle Group, where we have got 18,000 members, and we would love to have you joining us. And on Twitter, you can join and follow us on Fintech Circle.
We'll put up the tag.
And Fintech Circle Innovate.
At FTC Innovate.
Yes.
At FTC
We'll put it up.
Right?
Cool.
And also on the Fintech book, it's literally the Fintech book, where you can find out more about the book itself, and you can buy the book. On Amazon, it's available everywhere to read
As
it
an
out.
ebook, as a
and an
download.
ebook, exactly, download, and to get ideas for your own submission. Maybe because it gives you ideas what you need to do to get into the final list of authors. But what is key, I think, is we made it very democratic. In order to become part of the book, nobody can buy a place in the book. It really has to be on merit.
Good.
So it doesn't matter if your company is 2 men or 2 women businesses, or if it's a 10,000 people business. Everybody's got the same chances to write a great article for this book. And we want to hear from you, and
Right.
want to make sure that the best content makes into the book.
Good.
Yes.
Well, thank you for your time today.
Sure,
I appreciate it. It's just lucky. You're running a conference here right now, and I just happen to be here doing some stuff in London, so
Yes.
I'm glad we could finally
great
meet.
to
And I'm going to
finally
be your first
meet.
chapter because I'm going to kick all your butts in terms of wealth, tech development,
Fantastic.
Wonderful.
All right,
fintech.
great.
Thank you.
Thank you very much. Thank you. Great to meet
Thanks
you
everyone
all.
for watching.
Yes.
So let's take some questions. I like questions. What do you guys got?